Few technical issues there. Good morning, everybody. It's the 28th of April. We're Signal Centre Talking Ball. This is the latest instalment of our daily show. I'm Joe, joined by Jamie and Steve. Good morning, gentlemen.
Morning.
Managed to hold up the fort while we was off over the last couple of days, Steve?
Well, if you can call it that, I suppose. Just a bit disappointed with the technical issues that you're obviously back in control, and it's just ruined it. I had it off to a T.
No, you're welcome to take over, mate, anytime you like.
No, you're fine.
Okay, let's get stuck straight into the headlines then, because we're a bit short on time today. So, Bank of Japan has refused to bend, according to our analysis and reports this morning. The Bank of Japan maintained interest rates at minus 0.1% following the latest policy decision, and also pledged to maintain a ceiling of 0.25% for 10-year bonds. In terms of the Ukraine, the fears continued there. Further concerns over the situation on Wednesday, with a particular focus on energy policies after Russia cut off exports to Poland and Bulgaria. Russia warned that it would take lightning action against countries that intervened. We've also seen the euro hit a fresh 5-year low on the concerns. The euro-US dollar dipped to a 5-year low before a slight rebound. On the flip side of that, the dollar hit 5-year highs, surging above previous resistance levels as doubts over the US outlook were more than overshadowed by the market assessment that there are no viable alternatives at this stage. German inflation will keep pressure on the ECB. The latest CPI data will be released today. Consensus forecasts are for the headline year-on-year rate to edge lower to 7.2% from 7.3%. So we'll be watching that. UK sales remained vulnerable. The retail sales index slumped to minus 35 for April from 9 the previous month. And finally, we've got Riksbank policy meeting today. The Swedish Riksbank will announce its latest policy decision today. No expectations of an interest rate increase at this stage. So that's the latest headlines. Let's get stuck into some charts. Steve, what are you going to kick off with today?
I'm going to kick off with Bitcoin. Everyone wants to know what's going on in Bitcoin. This is the weekly chart. It looks negative. So on a medium term and short term perspective, we're looking quite negative here. However, last week was a bit of indecision. We're seeing the same this week. So let's take a look at what we're seeing on the hourly chart, breaking it down to even here. We saw prices base out around about 37,700. Since then, we've seen a nice little uptick, nice little correction. If we really want to drill down into any real levels, we're around about the 61.8% Fibonacci correction, which is normal. But the interesting thing, the volumes are really drying up on this rally. So we're moving up, but there's no real conviction in it. So potentially the overriding trend is negative. So I'd look maybe to be looking to for selling opportunities in that at the moment. Commodities, quickly I'll dive into. We saw a nice well, it wasn't nice yesterday. My gun to hen trade failed miserably. However, it was a bit of an indecisive day. We've got a nice bullish engulfing after posting a bullish hammer, and price action tried hard to get above the 102.35. That's where resistance is at the moment. We stalled and ended up closing at the same price. So that's a doji. So there is potential for a bit of a turnaround. Yesterday we had oil inventories out, which led to a little bit of a sell-off to the downside, but prices have steadied a little bit from there. So on the hourly chart, get rid of that bad trade idea from yesterday. We can see this this previous resistance now turned into support on a couple of occasions. So we really need to see a breakdown below 99.30, right about that level, or a break up above 102.40 to really find the next short-term trend. If anything, looks a little bit toppy here. The last hour coming up to 9 o'clock is showing a shooting star after a rally. So again, maybe an opportunity to sell into it. And finally, I'll just dive into gold. Take a look at that. It's broken down through the really decent support level that we have been talking about And we can see here on the chart, 1895 to 1890 was really the level of support. It broke down, got down to 1872 overnight. So really, as we can see here, what was this, the 25th? So a few days ago, bounced off that 1892 level, and now it's gone through quite aggressively. But we've just seen a little bit of a turnaround in the last couple of hours. So gold found a little bit of support, 1872, bouncing from it nicely. But I'd be looking at maybe again selling into that around about the 1890-95 level at the moment. So opportunities to sell into rallies. That's what it feels like on the crypto and commodity side.
Lovely. Thank you very much, Steve. Let's now take a look at FX. Not going to go into too much detail today because we are a little short on time, but just going to focus on some of the main markets. First of all, we've got the dollar index. Now, yesterday we saw a big move to the upside. We challenged the previous resistance here, the black line. Why that's relevant, if we go back to the height of the pandemic here in March 2020, we can see that was the previous high. And we're having a little bit of a look above that today. Interestingly, though, we are posting a shooting star candle as things stand at the moment. Still up on the day by 0.14% on dollar index, but well off of the highs, which came in just under that resistance at 103.82. Now, who's disconnecting me?
Oh,
So that red line, if we go all the way back here, was the previous high from December 2016. So we are challenging some key levels up here, but we're seeing a bit of a shooting star. So maybe we're going to see some calling off on this, some profit taking potentially after a really strong run higher. Now, that's obviously going to have an impact on euro US dollar. That broke down below key supports yesterday. This support here is from the lows that we posted at the height of the pandemic back in March 2020. But we are posting a interesting looking hammer candle as things stand at the moment. Long way to go on the session. So we're not going to get too excited about it, but potentially here we are forming some sort of short-term bottom, which could drag in some speculators to push higher prices on this. If we take a look finally at cable, we can see that's trading a key level here, a 61.8% Fibonacci level of the entire move that started at the height of the pandemic to those highs that we then posted in May 21. We're at the 61.8% level, which is a number I always like to see on the charts, and that seems to be doing a decent job as things stand. So potential for some reversals in some of these markets that have been trending quite aggressively in one direction. So euro on the downside, dollar on the upside, and also sterling as well, potentially an opportunity for a little bit of a turnaround. Because of the inaction of the Bank of Japan, we've seen a really strong move here as well. Lots of them up over or around 2% at the moment. So more yen weakness being seen there as well. So plenty of volatility around in the FX space. If we take a look then at the indices, let's take a look at Aussie. That continues to trade below this big resistance level, but we've seen a little bit of a turnaround take place in the last couple of sessions. If we take a look at DAX, that's up by 1.28% as things stand. Seems to have found some support at a 50% fib level. Ideally, I'd like to see it above the candle or the highs of the candle that were posted on the 26th, because that was a really big move to the downside. And if we take a look finally at some of the US markets, we saw the NASDAQ broke down below support here, the previous swing low from the 15th of March. We've reversed that reasonably well. We haven't got above the candle that created the breakdown from the 26th of April yet. So while that remains the case, it looks to be a situation here of selling into rallies in the US markets. We've got the S&P 500 only up by 0.8%, which is lagging some of the European markets at the minute. And again, that looks to be another situation where I would probably prefer selling into rallies. Looks like we've got some decent support down here that has been challenged. And if we get a clean break below that, then that may trigger further selling in the US indices. That's it from me.
Thanks, Joe. I'll quickly jump into some stocks then. So first off, I'm going to look at the biggest gainer and loser. This is Molan. I saw this candle. I thought, wow, that candle really is bad. Like, I can see why it's down. No, it's actually even further down. We're at $8 here. So we had this huge gap. I mean, almost a 50% gap. So that's a tough time for Molan. Yeah, that's a real bad one. But looking on the better side of things, CPHC, which is Canterbury Park Holding Corporation, had this quite nice technical trade actually, where we had this resistance level here at about 22.50. Touched it once, touched it twice. We broke through, and it's just smashed through now with increased volume. We had that. What I always say I like to see before a breakout is the kind of the lower levels of volume, which we had here on the previous days, and then it really did smash through, and it's up 22% on yesterday. And I think overall, what we're here, we were 22, so that's about as close to kind of another 50% from the breakout level. So yeah, happy time for holders of that. We'll quickly jump into a couple more. I wanted to look at Netflix again. I know we've looked at it quite a lot recently, but the more I want to take away from Netflix is when a stock's doing badly, it can quite often do worse than that. We had this initial sell-off after earnings, which was about a 35% move, and you think that's bad. It can't surely get worse. No, it can get worse. We're now down 45%, 46% from where that started about a week ago. So yeah, tough time for Netflix. It's kind of a case of how low can it go, and I'd probably be trying to target some Fibonacci levels. Not a lot in the way of support now for a long way. Probably not till this kind of 130 level around here. So not a happy time for Netflix. Similarly, not a great time for Cisco, but this is quite a nice technical trade. There were two kind of chances to get into this. We actually looked at trading the breakout from this level here at about 54. But equally, if you missed that, there was a really nice retest. Let me try and zoom in, make it a bit clearer. We had a really nice retest this level just here, where it touched again and then it shot lower. So there were two chances to get into Cisco on the short side there. We got in the break, but like I say, yeah, two opportunities to get in. Lastly, I'll take a quick look. Was I looking at Barclays? Yeah, I think I was looking at Barclays. Take a look at this on a weekly chart if I pull it up. And you can see the last 2 weeks, we've had these real indecision candles, these doji style candles, which suggests that we don't really know where price is going. There's nothing obvious. Buyers and sellers are fighting it out. But I've decided I'm making a decision. I don't like this tool. So I would be looking for a move lower than this, probably towards a 61.8 fib from the COVID lows to the recent highs. That also coincides if we extended this line out with support over here. We got the support here. So I think if I had to kind of make an educated guess on where Barclays could be going, if it does head lower, it's looking like that 125, the 61.8 fib is where it's heading. I'd want to see a close or below this level, which is kind of holding up this 141. But after that, I think 125 is the next logical target for Barclays. And we will call it there. Oh, earnings today on Barclays by looks of it as well. So that could be an interesting one.
No, cool. You won't be popular when you go into Barclays Bank this afternoon, will you?
No, I'll be straight into Lloyd's.
If there is a Barclays Bank, yeah, I was going to say, if there's a Barclays Bank left on the high street.
Yeah. Superb. Thanks, Jamie. So let's go now onto the gun to the head trade. So each day we call a trade live on the video. Each idea must have a stop and a target. All ideas are placed at market and published to our TradingView profile. The trade ideas will expire at 9 p.m. UK time or when the stop or the target is hit, and we maintain a performance spreadsheet. I've not been around for the last couple of days, so it's not up to date. Steve, you've been holding the fort there. Obviously, you published a trade for us yesterday, which you kind of alluded to didn't do particularly well. Was that right?
Didn't do well yesterday. I think the day before I might have hit target selling Nasdaq. So
you did. Yeah, it was nice.
So we had a Bitcoin win in there as well. So yeah, all good. I'll update that and we'll have a proper look at it tomorrow. But I'm going to go ahead with my gun to the head trade first up, if that's okay, because I've got to drop off. So I'm feeling pretty keen on the turnaround at the moment on sterling against the US dollar. So we've hit a really important 61.8% fib level on the daily chart following this dramatic sell-off. So I think there's potential here for a little bit of a turnaround. If we take a look at the intraday chart, so this is the hourly chart on cable, we can see here's the support level that has formed, and I'm looking to buy it now in anticipation of higher prices. So this is obviously highly speculative against the trend, but I think there's enough there for me, even just that 61.8% fib level on the daily chart to encourage me to get involved here. So I'm going to buy it at a price of 1.2556. I'm going to target a move to this 61.8% fib level of this swing move here, which comes in this morning at 128.61. My stop loss is going below the lows of the session today, so I've put that at 124.88, which gives me a risk reward ratio of 4.51. So looking for a decent turnaround on that today.
Nice one, Joe. You can drop off and we can finish off if you want.
I will do that. Thank you very much, gentlemen. And I'll be back tomorrow. See you later.
Cool. Nice. See you, Joe.
Do you want to go next, Jamie?
Yeah, go on then. I'll go next. I'm looking at one of my breakout type trades. So here we've got the Aussie dollar against the Swiss franc. We were breaking above this 8 o'clock candle. We were breaking above this previous level of resistance, but it got a bit scared towards the end. It started selling off back into that level, but I'm not scared, so I'm going to go ahead with it. We are going to look to buy this at, what's price at? We're about 0.6925, so let me put that in. We are then going to take profit at 0.6980, and we're going to have our stop. Stop 0.6907. So this is quite an aggressive trade. I'd probably want to keep the stop under the low of the candle, but not to be today. I want to get good risk reward in, so I'm just going to hope this kind of shoots off from here. So yeah, we are looking to buy the Aussie dollar against the Swiss franc today.
Nice one. I'm going to look at a couple of trades. Were mentioned on the Trading View channel yesterday to have a look at, please. I didn't see it till after the show finished, so I'll have a quick look at these. These are both cryptocurrency, poly, US dollar, and really give a general analysis on this. Now, we can see the last couple of candles or couple of weeks of price action have been a bit indecisive. We are getting towards some decent support level, this doesn't look too bad as far as I'm concerned, poly US dollar. On the shorter term charts, maybe we are looking at holding around this support, a break down below 37.34, and then I'd be a little bit concerned, but there is further support down below that at 36.76. So really, if as long as things hold above there, there's opportunity on the upside. POG USDT doesn't look so good in my opinion. This is we've had a couple of negative weeks, especially this week, and even on the sort of like the daily chart, you can look. We've got 1, 2, 3, 4, 5, 6, 7 negative days in a row, which isn't good. Support coming in at the moment at 11.65. That looks like we are. Shorter term chart looks like it's breaking lower. This is a 4-hour chart. Nothing really to sort of stem this flow apart from previous support. So I would remain a little bit negative on there. And the 1-hour chart just looks a bit crappy as well. We've seen a little bit of volume coming in, supporting around these levels. So really maybe that'll get dragged by Bitcoins, which is my trade idea of the day actually today. So looking at the 1-hour chart on Bitcoin, as I said before, the short-term trend is negative. The 1-hour chart is showing a couple of decent shooting star candles around the 61.8% fib. So for me, this would be a good risk reward trade idea. Getting short here, putting the stop around about, say we look about, oh, that seems a bit high. Why am I going to that high? 30,000, which is only about 300 pips, isn't it? Oh, that's the target I'm looking at. Here we go. I'll put the stop just above the recent high, and that'll allow me to give a decent target on the downside. I might actually go for more than that. There we go, somewhere in the middle. So that'll give me a nice little 5-to-1 risk reward. To see prices back down to 37.98. So I'm looking to sell Bitcoin US dollar 39,408, targeting a move to 37,908, and the stop at 39,708. That's my trade idea today on Bitcoin with a gun to my head.
Nice, I like that.
Yeah. Okay, let's see if I can just finish off by. Oh, let me save this. I'm just trying to, in the background, trying to do a little bit of a document for to show you what news we're expecting out today on the calendar. See if I can upload it, Joe. Pressure's on, pressure's on. I think I can do it.
Can you do it live on the clock?
Can I do it live? Oh, it's uploading, it's uploading. Well, let's start with day ahead is 1 o'clock. We got Germany. Oh, there we go. Germany consumer prices. 1:30, we've got US GDP Q1 advance reading. Obviously, that's the big one. And US jobless claims at 1:30. Also, the key events over the next week, we've got US PCE prices index tomorrow. Next week, we've got the Reserve Bank of Australia, the RBA policy decision, Federal Reserve policy decision, Bank of England policy decision, along with the all-awaited US employment report and the Canadian employment report next Friday. So that's pretty much what we've got, which is quite exciting for next week. Let's see how the GDP does this afternoon and how our trades perform, and we'll join you back tomorrow.
Cool. Nice, Steve.
Cheers, guys. Take care.
Thanks, guys.